So, I think if you're a Tesla investor, you really need to watch this video in its entirety. Because just a couple of days ago, everyone was over the moon for Tesla. Deliveries came out much higher than expectations. Tesla is smashing literally all the estimates that are given to Tesla. Tesla destroys them like nobody's business. And everyone was excited. And we've seen good news every single day. But the last 3 days of trading, Tesla has almost fallen 5%. And it seems like the sentiment went from very bullish to now quite pessimistic. When in reality, there's two catalysts that you should be concerned about, potentially. And I want to get into those here in this video. I also want to break down the technicals because, believe it or not, Tesla filled the gap today. And what we actually seen wasn't all that bad. So, if you're confused, well, I don't blame you. It's a little confusing what happens with Tesla on a day-by-day basis. We'll put it into context. If you like these kind of videos and you want to stay up to date with everything happening, not just with Tesla, but in the broad markets, hit the subscribe button as well as the like button. So let's start off this video with just providing a little context on the technicals and this quote-unquote gap that got filled today. And then we're going to come back to the charts to look at potentially how these two catalysts coming up, could affect Tesla stock, whether they are bullish or whether they are bearish. So this gap to fill. If you guys are unfamiliar what a gap to fill is, essentially the day of deliveries, Tesla gapped up almost 7%. So you're filling that gap back down to where it gapped up from. Pretty straightforward, but just throw that out there if you guys were unaware. Well, the gap to fill was down here at about 265. And what happened today with Tesla is you bounced right off of, you guessed it, 265. So for anyone that is super negative out there, if this was going to be an imminent crash, if this was going to be a very bad event, you wouldn't have seen the bounce like we seen today. You bounced right at the gap fill level. This is normal. This to me so far looks like a correction, which is actually very healthy to head up and to retake new highs of this cycle. Now, there is a couple negative factors as well on a technical basis, as well as some positive factors. We've talked about it. The golden cross has been very positive. The RSI, though, is starting to come down and you're getting a bearish curl down. That is not so bullish. That's quite bearish. It's showing the sentiment is changing. Now, depending on how you look at the situation, the RSI falling could make room for a larger up move before the RSI is overbought again, before that's a huge technical bearish indicator. Just 2 weeks ago, analysts were going on CNBC and saying Tesla is the most overbought stock in the NASDAQ, that it has to come down. And eventually that will happen, but that did not happen right away. Tesla actually was the most overbought stock in the NASDAQ. It came down, and then it retraced back to a higher level that it was at previously. Something similar could come again if these two catalysts are bullish. I keep referring back to these two catalysts. That's the bottom line. And you should really base your expectations for Tesla stock off of these two catalysts. First catalyst, which is the less obvious one, it's inflation. And I know what you guys are saying. You've talked about this before, and you're right. I have talked about this now a couple times here on the channel. But this is the thing that matters this week and the only thing. Technicals look fine for Tesla. Looks like a correction. No sign of a crash yet. But if you get inflation that comes in hotter than expectations, that's going to mean a couple things. That's going to mean the Fed's going to have to keep interest rates higher for longer, and you're not going to get rate cuts as quickly. Now, Tesla, what business are they in? And I know that's a trick question because they're in multiple businesses, but their car business is their biggest business. That's what people really make their bullish or bearish case on. The energy storage, all of that stuff is great, and it's probably going to become a bigger business long term than Tesla's auto business. But right now, the course of interest rates will affect Tesla's stock a lot. If inflation comes in hotter than expectations, that's the risk that we could see for this week, and that's what could cause a down move under that 265 level. That's where you could start to target that 250, potentially 240 level. Now, it all depends on how hot inflation were to come out. But as of right now, I'm not seeing any signs that inflation is reaccelerating. And let me say this as well. I'm not a superstitious kind of person, but I do notice things in the market. And you should as well. What stocks performed well today? Your small and mid-cap stocks. Your stocks that are vulnerable to inflation and interest rates going higher. You are 2 days. Well, now you're only one trading day away, but you were 2 days away from the inflation report coming out. I don't think if the markets expected inflation to come in hotter than expectations, your stocks that are heavily correlated to interest rates and inflation would have outperformed today. Fubo was up almost 20% at one point today. If inflation was going to come in above expectations, I think you would have seen a sell-off in those names, and you would have seen big tech outperform. You've seen the opposite today. Very much kind of the clearest sign you can have that inflation is going to come in at least at expectations or better than expectations. That's the bottom line. This was a huge sign today, and nobody is paying attention. And you're probably not going to hear this said in any other video, but it's a big deal. So if today's move in small and mid-cap stocks is any indication that inflation is going to come in weaker than what we expect on Wednesday, well, that's going to, again, be positive for Tesla, as it will almost instantly drive down bond yields, and that will make financing vehicles less expensive. What could happen to Tesla in that scenario? Well, back to the inflation expectations. Your headline year over year is expected to come in at 3.1%. Your month over month headline is expected to come in at 0.3%. I like to say, or think at least, core is more important, but we've actually gotten the biggest moves recently from CPI reports based off of the headline year over year numbers. So core, as it is important, markets really pay attention to that headline number. If you come in at 3.1%, well, that's likely to be a positive thing for Tesla. I don't know how high we actually rally from there because it's the expectations. Maybe back to that 275, 280 level. That's kind of what I would expect. But let me tell you right now, and I'll be the first to say this. If your year over year headline inflation comes in under 3%, I think Tesla's breaking that 285, this prior high that we just seen 4 trading days ago. That would be my expectation, because that has a lot of implications and positive, maybe I should say positive implications for Tesla's business, for financing vehicles. Bond yields would likely drop 25 basis points that single day. That would be like getting a rate cut instantly. And by yields dropping, all of that, that's, I mean, the 2-year treasury, it's trading at some of the highest levels that we've seen. Obviously in the last year, it's at the highest level. Last couple years, the highest level. Same thing with the 10-year treasury. Same story here. It's trading at the higher end ranges. These would fall big time if inflation were to come in under 3%. The second biggest catalyst for Tesla is on July 19th and after hours. This is one that everyone knows about, that everyone's going to talk about. You guessed it again, Tesla's earnings. Now, I'm excited about Tesla's earnings for really one reason. Obviously, energy storage, all of these things are going to be great. I don't know when the markets are going to start to care about those other things. Right now, there's one thing the markets are going to care about with Tesla's earnings. We already know the deliveries. It's the margins and the forward guidance on what Elon says, or news on the Cybertruck, or news on the Mexico factory. Those things will be super important as well, especially that forward guidance. But right now, there's a huge disconnect happening. So right now, the markets are expecting, or the average analyst is projecting, I should say, Tesla will earn 79 cents a share for their EPS. Well, based on recent estimates from some of your notable analysts, like Jeffries today, that upgraded Tesla from 185 to 265, these numbers could come in closer to 90 cents a share. If that happens, that's going to mean your margins are a lot better than expectations. People are expecting your net profit margins to be in between 8 and 10%. Last quarter, it was 13%. We didn't really see price cuts that aggressively. So we don't have a high bar to beat. I'm not a financial advisor. I don't have a crystal ball. I'm not a fucking fortune teller here. But it's almost guaranteed that Tesla's going to beat their EPS number based on how low it is. Just since Tesla beat their delivery estimates, the EPS estimate has only went up 2 cents. It was 92 cents for the estimate 3 months ago. It's now 79 cents. It was 77 cents before these delivery numbers. Like, the estimates are far too low. That's the bottom line here. So Tesla's going to beat on margins. That's going to be bullish. Now, does Elon try to sandbag us and say, yeah, things aren't going great? Well, that's kind of hard to do when you're producing delivery numbers higher than any analyst expectation. So I don't expect any super negative commentary from Elon. I expect possibly an announcement of the Cybertruck. I think that would be bullish. Now, you could make an argument that Tesla could talk about expanding into a factory or two. Maybe North Mexico, maybe they strike a deal with France. They're basically begging Elon to build a factory there. That could be negative for CapEx. It could be more expenditures down the line. It could mean less profits down the line. But that's hard to tell, and that would be speculation. But what we know right now, at least what we can reasonably know, is Tesla's going to beat their gross margin estimates. And analysts are projecting, as well as I'm projecting, these are going to be the trough in margins. The trough basically means that fall. Well, you're bottoming out right now. So that is very positive. Let me tell you guys like this. The one thing the markets hate more than bad news is uncertainty. The markets hate uncertainty more than bad news. We can deal with bad news. Uncertainty, we can't deal with that. That's why stocks crash. It's not bad news, it's uncertainty. Sometimes bad news too, but mostly uncertainty. What you're seeing right now in big tech today was uncertainty, not any news that came out. So if the uncertainty is gone on where Tesla's margins are going to bottom out at, if we get a clearer picture on why margins will improve and demand is still good, there's no way that's bearish for Tesla. So just being logical here, I'm not trying to be a, perma bull or whatnot. There is some risks here, like I said, definitely with CPI this week. I just don't see huge risk from Tesla's earnings, although the stock has rallied quite a bit. Some of it could be baked in. That's always a possibility. Sure, it depends on what kind of news we get, and that is purely onto speculation. But what I like to do, especially when you're talking about valuation and things being baked into the stock, just look at the PEG ratio. Okay, if Tesla comes in around 90 cents of EPS, as I expect they will, that's instantly going to change the valuation for Tesla by quite a bit. It could potentially, let's go ahead and run some rough math for everyone here. Say Tesla stocks at roughly 265. Let's pull up the 1 year analyst earnings expectation. So 265, we'll go ahead and divide that. If we think Tesla's 2023 full year estimates are going to come out at, call it $4 per share, or no, let's be more conservative than that, $3.75. That gives you a current PE ratio of 70.66. Well, we're expecting EPS growth to be somewhere around 40%. So, divide that by 40. You're looking at a 1.76 PEG ratio. Now, if you do this same calculation for something such as an Apple, let's go ahead and pull up the calculator again. Well, it's hard to do this, right? Because if Apple's expected to give us, call it $4.50 of earnings for this year, well, when the stock is around 188, divide that by, call it 450, you're at almost a 41 PE for current numbers, right? Obviously, what the number comes in as, 450 or $5 or whatever the number is, it's going to change this calculation. But Apple's margins are expected to grow like 5%, or not margins, but EPS growth is expected to grow like 5% or less. So if you do that, you have an over 8 times PEG ratio. No matter which way you want to make the calculation, Tesla's still trading very cheap, especially if earnings come in better than expectations. So I guess after earnings, it's really a guessing game here again. Tesla, if we see better than expected margins, obviously better than expected EPS at that point, and we get bullish commentary from Elon the same way that we did back here in January when Tesla stock bottomed because Elon said there was almost 2 vehicles being sold for every 1 that they could produce. If we get something along those lines, an update on advertising, there's literally so many things. So I could make a whole video on it. But long story short, if some of these positive things we expect to happen actually happen, that's where Tesla stock could break well over $300 per share. The 52-week high is $315. I think we could easily exceed that if earnings exceed everyone's expectations. If they don't, well, then we have a problem. And we'll let you guys know where the stock could go at that point. If things were to be terrible, I mean, you could go back to $220 per share. That's certainly a possibility. That's going to be a major level of support down here. Now, between now and July 19th, if stocks crash, if big tech continues to fall, well, you seen your support level today was 265. If you break under that, your next support level is 250. Your next one under that is 240. That's where I would expect the stock to bottom out if the markets do start to really see some downside. But before you get there, the 20-day moving average, this yellow line, is going to be a big level that you'll have to break under. And that's at 261. So if you break under 261, odds are you fall to 250. Break under 250, odds are you fall to 240. But I wouldn't expect anything worse than 240 unless all hell broke loose in the markets, or if inflation came in a lot hotter than expectations, or if Tesla had terrible earnings, which looks almost impossible at this point. So betting on Tesla to fall big from here is a fool's game. Hedge out if you want to, but I think the lower Tesla goes, especially heading into CPI on Wednesday or earnings on July 19th, is just a buy the dip opportunity. Maybe I'm wrong. Maybe I'm missing something here. Let me know what you think down below in the comment section. If there is some real risk to a crash or some downside from here, because again, maybe I'm missing something. Clarify it for me down below in the comment section. Let me know what you think about Tesla stock and where Tesla stock is going to go. That is going to do it for this video. If you guys do want to come trade with me live in real time every time I make a trade, link down below in the description of this video for the Patreon. Sign up over there. We'll send you a link. Get you guys all signed up. Get yourself free stock with Webull, as well as check out the link for merch if you guys also want to rock your Tesla gear everywhere you go. Nonetheless, enjoy the rest of your day, and I will see you in the next one.